We are cautious. I said we were discussing that before, and the reason for that is valuations are stretched. At the same time, the federal policy, monetary policy is turning hawkish, which was revealed a couple of weeks ago. 10 years now 4.5 and above 4.5, and so in the face of high rates, high real rates, and high stretched valuations, portends some challenges on earnings growth. Yeah.
What about the big tech? Because when you think about how important they have been, and when you think about ultimately rates are coming down, they're not coming down significantly. They're not coming down at the rate that many people thought at the start of 2024, but they're still expected to come down. Yeah. What is the outlook here for the big tech, and what do you think is actually the event that could change the narrative for big tech, given that you're a little bit bearish here?
So the November 22 is when ChatGPT was released, and the last 2-year rally is in many ways driven by an AI-driven rally. And the big cap tech have benefited the most from it, both in terms of sentiment and in terms of Nvidia and others' actual earnings and free cash flows. Now, going forward, so the multiples have inflated on the back of this AI rally. Now the real rate is high. While you say that rates are coming down, what we've actually done is price out cuts. So relative to expectations, that the rates have actually gone up. So 10 years has gone up. We have priced out a lot of cuts in 2025. So the real rates have gone up while valuations have gotten stretched. The thing that will break kind of or cause concern is if earnings revisions start becoming negative, which already started happening for Microsoft because of the huge capex that is coming. They're doing a lot of investments in AI. Depreciation bill is coming, and that depreciation bill will not be met with sufficient revenues. That will start leading earnings to growth challenges. Microsoft's earnings for 2026 have been revised down for the last 6 months. And in fact, Microsoft underperformed S&P 500 significantly last year. And that is the largest AI spender. And that's possibly a cause of concern for other AI spenders as well, that your multiples are high, earnings revisions start becoming negative, and real rates are high. Not a good combination.
Overall, you're cautious on global equities, yet you're head of equities. So I have to ask you, where's the performance going to come from in 2025? Any parts of the market you would highlight as potential gainers for the new year? Yeah,
you have to go to stock-specific and idiosyncratic stories. I mean, this doesn't necessarily mean if I'm cautious on S&P 500 and that's 70% of MSCI World, I mean, you would have to say I'm cautious on global equities. With that said, I think Japan is probably still cheap. The yen depreciation has continued. There's still plenty of FX-related gains to come. 3 years ago, yen was 110, it's 150. Japanese companies will still benefit, even though despite the China slowdown, will still benefit from a lot of FX-based. So I still like topics. But overall, I'd like to say Novo has pulled back a lot. I know Steve was talking about it, and I've discussed obesity with him before. I think the pullback because of CagriSema, etc., is probably overdone. But you have to go to stock-specific, individual stories, etc.